Wall Street's main indexes closed sharply lower on Thursday, with the technology-heavy Nasdaq leading the declines as shares of Tesla plunged and investors dumped Micron on news of job cuts. The Dow shed just over 1%, the S&P lost nearly 1.5%, and the Nasdaq dropped almost 2.2%. Tesla sank nearly 9% after Elon Musk's EV maker doubled its discount offering on models in the U.S. this month, amid concerns over softening demand. Tesla is now on track for its worst month ever. And chipmaker Micron Technology also weighed heavily on the Nasdaq after announcing it will lay off 10% of its workforce next year. It's the latest major tech company, along with Facebook and Amazon, to announce massive job cuts. Mark Newman is Chief Investment Officer and founder of Constrained Capital.
So I think the tech companies really overhired. And I think that part of that push for them to overhire was the continuously easy rates. And that allowed a bit of excess hiring, maybe hiring, let's call them chief sustainability officers, chief people officers. And really, excess hiring when rates are easy is not a very tricky maneuver, meaning if rates are low, your bogey, break even, let's call it, on a new hire is not as high as it is when the 2-year yield goes from 75 basis points to over 4%. All of a sudden, your errors, your mistakes, your costly hires, let's call them, become that much more compounded.
Tech layoffs aside, the labor market still looks pretty tight, with filings for state unemployment benefits rising last week but still below economist estimates. That, along with a stronger than expected final estimate of the third quarter GDP, led investors to worry that a resilient economy would lead the Federal Reserve to keep hiking interest rates for longer than expected.